Hey guys, what's up? Good evening. Welcome back to another live stream from Charlotte in North Carolina. Can you guys see me or hear me? There you go. Jacob Carrillo. $275 on SMCI today. Yeah, we killed it today with SMCI. Once again, what's up, guys? How are you? So today we have a new all-time high for the S&P 500 and the SPY. Did we have a record close in the case of the Qs? I'm not certain about it. Let me see. Last time I checked, we were about to. No. Yeah, so we still have a bit of more room to the upside in the case of the Qs. So the Nasdaq 100 didn't hit a brand new all-time high, but take a look at this. Green across the board, guys. Russell 2000 went up today 0.96%. The Nasdaq went up 2.96%. The S&P went up 2.11%, and the Dow Jones went up 1.18%, and the S&P 500 was hitting new all-time highs, like all day long highs. Hey guys, sorry. New all-time high, after new all-time high, after new all-time high, after new all-time high. So the bulls are in total control of the tape. And let me ask you something, guys. Let me pull up here a chart of the SPY. Let's talk about common sense. Is there any reason, guys, to buy puts of the SPY here? Take a look at this technical chart, guys. Clear uptrend above all the moving averages. Upward sloping 100-day moving average. Upward sloping 200 DMA. Upward sloping 20-day moving average, upward sloping 5-day moving average. Is there any reason to buy puts over here, guys? What do you guys think? Is there any reason, logical reason, in order to guess a top over here? Because I can guarantee you guys that today we had a bunch of people buying puts into the closing bell. Oh, we are extended. And the RSI is elevated, and the SPY went up $10 today. So and Nvda is overbought, and the SPY is overbought. Let's grab some puts. Bullshit. Can we have a pullback tomorrow? Of course it can happen. Why not? And I think any pullback over here would be a viable one. So let me draw a line over here. What about a pullback down to, let's say, 403? $403. This is a previous resistance that acted as such on two occasions. So, in my opinion, in regular market conditions, any pullback down to 503 or maybe down to the 5-day moving average near $500 would be a viable pullback. The bulls are in total control of the SPY and the S&P 500 for that matter, and the trend is up, and the trend is our friend. So no reason to believe that we are about to see a collapse of the SPY. And if for any reason we happen to see a collapse of the indices, SPY, triple Qs, you know what I am talking about, guys. The technical charts are going to let us know that there is something wrong going on over here. So we can buy puts or we can short the markets. But as of now, guys, I'm taking into account today's close. This technical chart is under the absolute control of buyers, and we can keep going higher. The markets can go higher, or I would say way higher than most people believe, guys. And when we are talking about an uptrend, and when it comes to a downtrend, the markets can go way lower than many people believe. That's the way this works. So we need to learn, or you guys need to learn how to understand the language, the message that a technical chart is sending over. And in this moment, and I am hoping for some sort of slight pullback overnight, I would be a happy dip buyer at $503, and that I already told you this is a previous resistance, or maybe this upward sloping 5-day moving average near $500. If the 5-day moving average happens to be broken to the downside, if $500 happens to be broken to the downside on good volume and stuff like that, and you guys know, and if we see Nvda pulling back, which happens to be the absolute leader of this rally that we are seeing as of now in the markets, I would be maybe willing to short the markets. But as of now, guys, there is zero reason to short the markets as of now. So keep that in mind. And on top of that, you guys don't need to you don't need to worry about the SPY. You know that I am going to be very active on Discord. I'm calling balls strikes and letting you guys know the most important areas of interest throughout the training sessions. By the way, I need to apologize because I am late. I told you that I was planning on starting the live stream at 4:30 p.m. But I usually trade earnings after hours. But no, I don't do it via call options or puts. I wait for any given report that I am interested in to be posted. And if the report happens to come out, better than expected, and if the price action matches what I am looking for, I usually trade stocks after hours when earnings reports are posted. And today I did it with Intuit. Take a look. I just took this trade after hours. I was able to purchase 15 shares of Intuit at $644, and I ended up selling out of these shares at $650. I ended up making over here $90, guys, in a matter of 10 minutes. So I cannot complain about it. Did I leave money on the table? Let me see. Intuit. No. So far, I haven't left any money on the table. Okay, guys, please drop a comment down below. Let me know what stocks you guys want me to go over. I have a handful of stocks that I would like to that I would like to review, that I would like to break down from a technical standpoint, because these are stocks that most people are looking for as of now. So let's get started with Nvda, and in the meantime, you just drop a comment down below and let me know. So Nvda, guys, what a beast! It went up today $110. And it closed the trading session at $785.38. It went up today 16%. What do you let me check on you guys' opinion. Do you think that Nvda can keep going higher? I know that there were people today buying puts over here. I don't understand the trade. I don't short uptrends, but I know that we had some traders out there buying puts over here. What do you guys think about Nvda? Jonathan Torres, absolutely. So hello, I'm Jonathan, Christine, Jacob, Alicia, Adam, Audio Dynamics, Gabriel Sell, Pep. Is this Pep Guardiola? No, that's not Pep Guardiola. Derek. So welcome back, guys. Yes, Nvda can go higher. Of course it can. Would I chase it here, guys? Probably not. I would like to see some sort of pullback down to $744. So this is a previous all-time high for Nvda. If Nvda drops down to $744, guys, I believe that in regular market conditions, this dip would be bought up right away. And if that is the case, I would be a participant in this dip buying most likely. Can Nvda keep going higher? Yes, it can. I don't see any reason why. But the problem of starting a position on Nvda over here at $790, pretty much all-time high, is the fact that since Nvda hasn't been before above $792, if Nvda keeps going higher, guys, it is going to be entering into no man's land. So we don't have any previous technical reference in order to try to figure out how high can Nvda go. Do I see a pullback down to $746 occurring maybe tomorrow? It could be the case. So let me see a minor time frame over here. Hold on, guys. Let me see. Price access. There I have it. Okay. So, I don't know, guys. Maybe even a little retracement down to $790, $770. Sorry, I meant $770 acted as support on 2 occasions today, guys. This would be also an interesting spot in order to start a position in Nvidia. So, in my opinion, it would be either $770 or maybe even better, obviously, $745. I think this stock is going higher. More likely than not in regular market conditions. You never know, guys, if we happen to get very bad news about the economy and all that, all that stuff. But in the meantime, and for the time being, and since the markets are not really paying attention to any macroeconomic data and stuff like that, I think that we have higher prices on the table for an Nvidia, and I would be a buyer at $770 or maybe $744. I am not going to show you any VWAPs in the case of Nvidia because it hit a brand new all-time high today, so we don't have any buyers trapped over here. Every single human being that ever started a position on Nvidia as of now is making money, so we don't need to take a look at a VWAPs. But let me take a look at the market structure of Nvidia. And here it is. Take a look, guys. Remember, this is a tool that I use on a daily basis in order to visualize imbalances between the demand and the supply of any given stock. On top of this chart, you guys can see the demand, and at the bottom, you guys can see the supply. Take a look at the demand. The demand is starting to decrease slowly, but take a look at the supply. And remember, demand buyers, supply sellers. The supply is collapsing. Sellers are running away from Nvidia. That's the reason why when we see this market structure of Nvidia, guys, we can understand why Nvidia was able to hold its gains today. And again, this was no joke, guys. Nvidia went up today $110. And it closed making a brand new all-time high. Why? There are no sellers. There are no sellers over here. They are gone. Kaputs. Sellers are nowhere to be found. And take a look. We can reconcile that technical chart with this market structure. Take a look at the supply. The supply is decreasing. This stock is going higher. Again, in regular market conditions. We never know when they are going to pull the rug out. You guys, understand what I am talking about. Okay, I have some requests over here about some stocks. Palantir. Palantir, the Messi of artificial intelligence. Let's go ahead and take a look at Palantir. I think that it went down today. No, it went up today. There you go. So good old Palantir, the Messi of AI, went up today 3.74%, and it closed the trading session at $23.59. This is a very good looking chart. This is an uptrend above all the moving averages. A bear would argue that Palantir is extended because it is super far away from the 100-day and the 200-day moving average. We can kind of make that case. Palantir as of now is trading 31% above its 100-day, and it is trading 44% above its 200-day moving average. The 5-day moving average is downward sloping, guys, kind of downward sloping, which is not a good sign in minor time frames. So my trade on Palantir would be confirming support above this 5-day moving average. So let's say that we open the trading session tomorrow and I notice that Palantir is closing candles above $24. I would be a buyer of Palantir over here. Again, above $24. Be careful, because below the 5-day moving average, we have sellers trying to gain control of this technical chart in minor time frames. So below $24, we could be about to see a test of a previous support that acted as such yesterday at $22, or maybe a test of this 20-day moving average, which, by the way, happens to be upward sloping, and that implies that if tested while it is upward sloping, it is very likely to act as a good support. So above 24 bucks, I would be a buyer of good old Palantir. From 24 bucks up to its 52-week high near $25.50. This would be a 6% profit trade. This would be my trade on Palantir. Let me take a look at a VWAPs of Palantir over here, guys. Let me see. Oh, by the way, take a look. What a coincidence. Here you guys can see Palantir. And take a look, guys. Very good. This is very bullish. So over here you guys can see two VWAPs. One, the longest one, comes from the all-time high of Palantir. Over here we have an average price of $16.60. So this implies that the average market participant that opened a position on Palantir since this stock hit its all-time high, this was back in 2021, January of 2021, way back then Palantir hit 44 bucks. As of now, those market participants are making money. Yeah. They have an average price of $16.72. And the shortest AVWAP was displayed from Palantir. This is the second to last earnings report. Let me see, guys. Let me delete this AVWAP, and you guys know that I am 100% improvising over here. I am going to display over here an AVWAP from the last earnings report of Palantir. And take a look at this, guys. How interesting. Take a look at the spot at which Palantir found support yesterday. Right at this AVWAP that comes from where? From none other than the last earnings report of Palantir. So the market participants that started positions on Palantir from its last earnings report as of now, the average has an average price of 22 bucks. Very important support in case that Palantir, I don't know, drops tomorrow. So this could be another interesting spot from which we could be starting a trade on Palantir if we happen to confirm the 22 bucks effectively acts as support. So 22 bucks as support to the downside. Lower than 22 bucks, we have the upward sloping 20-day moving average. And in general terms, if this AI mania is going to keep going, you guys understand what I'm trying to say, right? Because Nvda killed expectations or crushed expectations yesterday and stuff like that. And AI is the future, bruh. Okay, so if that phenomenon keeps going, guys, Palantir can go way higher than its most recent 52-week high at 25 bucks. Why? Because we don't have a lot of buyers trapped above the current price of Palantir. So we don't have a lot of well-defined, let's say, areas of overhead supply above 22 bucks. So this is bullish, and maybe that could be signaling, guys, that if this 52-week high of Palantir happens to be taken out by the bulls at $25.50, we have more room to the upside, guys. Maybe up to 30 bucks. This is a previous resistance back from mid-September of 2021. So in regular market conditions, the technical chart of Palantir says that we have higher prices coming up more likely than not. Let me see the market structure of Palantir. PLTR. What do we have over here? Let me see. Demand and supply. Take a look. Nothing crazy, guys. The demand or the level of the demand is way above the supply, and the supply is decreasing. So maybe higher prices are coming up for Palantir. How the market structure on Bros. Let me see. Bros. Sure, absolutely. That's Bros. They posted earnings yesterday, right, or today? I think so. Don't quote me on that, but I'm kind of sure. The supply is rising and above average. When I say average, I am talking about this dotted line that you guys can see over here. And the demand is kind of stable. It isn't going down or up. So it isn't rising, but it isn't decreasing either. So I don't know. I would say that this is a tie between buyers and sellers. It doesn't say much, but yeah, we can make the case that the supply is higher than the demand. So you have to be careful here. We might be about to see profit taking in the case of Dutch Bros, which is in a downtrend below all the moving averages. So this would be a no touch, in my opinion, below $28. Taking into account the market structure that we are seeing in the case of Dutch Bros. There you go. Okay. Let me see. IWM. Let me see. Let me take a look at the IWM. This is a ticker that I have been trading, guys, left and right. Like left and right. The IWM. And mind you, guys, this is my personal opinion. And of course, I could be mistaken. If the IWM happens to take out, happens to burst above, happens to break out from $205, we have a big and huge breakout to the upside coming up for the IWM. Let me pull up a major time frame chart over here. I think that if the bulls can burst above $205, and if they are able to consolidate above $205, guys, we have at least an appointment with $212 coming up for the IWM. Above $212, I wouldn't be surprised. I wouldn't be surprised if we see even $227, which happens to be a previous resistance back from. This is back from January of 2022. But mind you, the IWM has a very tough enemy. TNX, the 10-year Treasury yield. So whenever you guys are thinking about trading the IWM, excuse me, guys. Whenever you guys are thinking about trading the IWM, you need to follow the 10-year Treasury yield, TNX. The IWM is a highly sensitive index relative to yields. And why, you may ask? Why is that happening? Well, guys, because something like 45% of the stocks that trade inside the Russell 2000 or the IWM, you guys know that the IWM is nothing but an ETF of the Russell 2000, a small cap index. Well, near 45% of all of the stocks or the companies that trade inside the Russell 2000 are non-profitable companies. So those companies are very sensitive to interest rates. So take a look at TNX, at the 10-year Treasury yield. The 10-year Treasury yield as of now is facing a very tough resistance right at this 100-day moving average near 4.34%. And take a look at how this 100-day moving average happens to coincide with a previous resistance back from September of last year and also back from mid-August of last year. So if TNX, if the 10-year Treasury yield happens to burst above 4.32% or happens to take out 43.27, this is going it will be very negative for the Russell 2000 and for the IWM, obviously, from a mechanical standpoint. If TNX happens to burst above 4.32%, from a mechanical standpoint, we're going to see most of the algorithms out there selling out of the IWM and rotating into less sensitive or less interest rate sensitive sectors of the markets. Okay? So this is something that you need to keep in mind. However, what would be a bullish scenario for the IWM? What happens if the bulls of yields of TNX, or what happens if TNX happens to be rejected right at this 100-day moving average, and if we happen to see some sort of pullback down to 4%, down to 40.25? This would be very bullish for the IWM, and if that were the case, I think that the IWM has a fair shot at taking out, at bursting above $205. So it is an interesting chart. And what would be my trade tomorrow in the case of the IWM? I would like to see the bulls consolidating above the 5-day moving average. You guys know that I use a lot, the 5-day moving average. So I would like to see some sort of process of consolidation above $200.50 each. If that were the case, maybe we have room up to 200. Let's just round it up, $204. This is a previous resistance back from February 16th. So if we are able to take this trade, guys, with the IWM consolidating above $201 from $201 up to $204, this could represent a 1.70% profit trade. Nothing but nothing to sneeze at in the case of the IWM. Coinbase. By the way, I closed a successful trade on Coinbase today with call options. So what is going on in the case of Coinbase Global? Excuse me, guys. Let me have a sip of whatever this is. What is this? Sprite, okay. I have streaming throughout the whole training session. So by the time that I'm streaming for you guys, I'm tired, usually, and thirsty, by the way. Okay, Coinbase. It went up today 5.23%, and it closed the trading session at $170.91. The trade that we were taking with Coinbase was confirming consolidation above $165. This was the trade that we opened because yesterday we opened a trade with call options. I purchased one call of Coinbase and I closed that trade successfully today. And this was the trade, guys. So $164 is an interesting spot in order to start a position in Coinbase because we are talking about a former resistance back from January 10th, and $164 acted as support yesterday and today as well. So if Coinbase opens the trading session tomorrow near $164, and if I happen to be able to confirm support at around $164, I would be more than willing to get Coinbase call options again. And another potential scenario would be, and take a look at how this how this 5-day moving average is upward sloping. So if Coinbase happens to consolidate above the 5-day moving average, so above $171, I would also be a buyer of calls of Coinbase over here. Let's say that we start a position slightly above the 5-day moving average, so slightly above $172. From $172 up to the next important gap that Coinbase has to the upside, I will define this gap as unfinished business because we are talking about the 52-week high of Coinbase. We are talking about $188, guys. This would represent an 8% profit trade from $173-ish up to $188. What about an 8% profit trade to close the week, guys? Beautiful, right? And this is an uptrend, guys, above all the moving averages, except for the 5. Yeah, the bulls closed the trading session slightly below the 5-day moving average today, but the 5-day moving average is upward sloping, so the bulls are just like, 1 minute away from being able to consolidate above the 5-day moving average. This technical chart is under the control of buyers. And I already told you this, guys. We have a big, and saying big is not fair. We have a huge catalyst coming up for Coinbase that you guys know that basically tracks Bitcoin. We have the halving event that is taking place, I think that by mid-April. I think that Bitcoin is very likely to run to the upside based on the hype of the halving event. And if that is the case, guys, Coinbase is going to be following Bitcoin. So we have a big event for the crypto space as a whole coming up in April. That's how far away, guys? That's like a month and a half away from us from today. So be careful, guys. We might be about to see higher prices for the crypto space as a whole. Let me take a look at the market structure of Coinbase Global. Let me see. Coinbase Global. Let's see. So Take a look. What do you guys see over here, guys? Take a look at the demand. It is through the roof and rising. And take a look at the supply. It is decreasing and below average. I think, I could be mistaken, but in regular market conditions, we have $188 coming up for Coinbase more likely than not. And for those who might be interested in grabbing puts of Coinbase or in shorting Coinbase, watch out for $164, guys. If this support happens to be broken to the downside on good volume, we could see Coinbase dropping down to $150. So calls above $164 and maybe puts if Coinbase happens to break $164 to the downside. Let me check on some VWAPs. You guys know that I love VWAPs. Anchored volume, weighted average price. Lines, let me see. Take a look. But I can, let me delete this. Let me delete this VWAP. Let me draw a new VWAP from the last earnings report of Coinbase. Where is it at here? There you go. Take a look. So, the longest VWAP comes from the all-time high of Coinbase. Everyone is making money over here. We have an average price of $106. And when it comes to the most recent market participants that opened a position on Coinbase, we can identify those market participants from Coinbase last earnings report. Take a look. We have an average price of $170. And $170 happens to coincide pretty much with the 5-day moving average. So any process of consolidation of Coinbase, guys, above $170, bullish. We can go all in. Call options. I'm joking, obviously, right? Okay. AMD, Advanced Micro Devices. What do we have over here? I think that AMD hit a brand new all-time high today. No, it didn't. It was about to do it, right? Yes. So the all-time high of AMD is $184. This is an easy one, guys. This is another technical chart that is under the total control of buyers. Above all the moving averages, we can make the case, as I just said it, in the case of Palantir and in the case of Nvda, that AMD is a bit far away from home base. When I am talking about home base, I am talking about both the 100 and the 200-day moving average. But other than that, guys, because that is some sort of bearish case that we can make in the case of AMD, the technical chart says that this stock is going higher. However, we have an important spot over here, and this is a fat number, $180. $180 is a previous resistance back from mid-February, and this is also a previous resistance back from early February. So let's say that tomorrow we see some sort of profit taking on most of the semiconductor stocks, the Nvidias of the world and the SMCIs of the world, and you know what I am talking about. Say that AMD breaks $180 to the downside. We could see AMD dropping down to the convergence of the 20-day and the 5-day moving average. I am talking about $173. This would be a viable dip, in my opinion, again, in regular market conditions. But if AMD opens this session consolidating above $180, and if you guys see, you know, SMH and Nvidia going higher and stuff like that, we have unfinished business right at $185. So from $181 up to $185, this is a 2% profit trade. So I think that we have higher prices coming up for AMD. I am not going to check on any VWAPs over here because we don't need to do it because AMD is trading at all-time high. But let me see the market structure of AMD. AMD, let's see. And take a look, guys. The demand is stable. Not going higher, not going lower. But the supply is decreasing. So we are in front of the stock of a company that just hit a brand new all-time high that is a bit extended relative to its 100 and 200-day moving average. But we can see over here the supply decreasing. So no sellers, guys. At least not a lot of them. So watch out watch out for AMD maybe hitting a brand new all-time high sooner rather than later, in my opinion. Can you talk SPY? I already did it. Yeah, you can rewind the live stream. I did it. That was the first sticker that I went over. As soon as the live stream started out. KRE. Okay, regional banks. Let's see. This is another, guys. If I told you guys, by the way, that the IWM is very sensitive to yields, go figure the KRE. This is a regional banks ETF. So let's talk about yields sensitive stocks. This is one of them. Probably the most sensitive stock out there given the current circumstances to yields. So, the KRE is trading above the 100. The 100, this blue line that you guys see over here, and the 200-day moving average. So that's a good signal, okay? But we have the 20-day downward sloping, and the KRE closed today's trading session below the 100-day moving average. So ideally, before trading the KRE, you need to take a look at the IWM. The IWM is also, let me rephrase that. We have most of the banks that trade inside the KRE trade inside the IWM. So the IWM is some sort of gauge in order to confirm that the trade that we want to start on the KRE is going in the right direction before I open the trade, okay? And you need to take a look at TNX, the 10-year Treasury yield. So if you want to buy calls of the KRE, but you see yields rising, so if you see TNX going higher and the IWM going lower, you cannot buy calls of the KRE. In my opinion, I wouldn't touch the KRE from a long standpoint below the 20-day moving average. So I wouldn't touch the KRE below $48. If I see yields dropping, so TNX going down, and the IWM also going, or the IWM on the flip side going higher, and the KRE takes out or can consolidate above this 20-day moving average, so above $49, I would be thinking about grabbing some calls of the KRE. But below $49, this is a no touch for me. So we are seeing over here signals that sellers are starting to take control of the KRE in minor time frames. So you have to be careful with this ticker. And since this is an ETF, I don't have the market structure available in the case of the KRE, but I can take a look at AV webs of the KRE, which I think that I have never done it before. Let me see. Okay, and what about, yes. So, let me see. Let me draw an AV web from its most recent 52-week high. Take a look. So, over here we can see two AV webs. Okay, anchored volume weighted average price lines. So the longest one comes from the big drop that we saw in the KRE back in March of last year when we had a bunch of regional banks going kaput or going under. And the shortest AV web comes from the most recent 52-week high of the KRE. Take a look. When it comes to the AV web, to this AV web that I just drew from the 52-week high of the KRE, over here we can see or we can notice a price. We can see a price of $50. So most of the participants, of the market participants that started positions on the KRE since this ETF hit a brand new all-time high, a brand new 52-week high that was back on December 14 of last year. As of now, they have an average price of $50. Big level of overhead supply for the KRE, guys. So if the KRE keeps going higher, this might be a level from which the KRE would be retracing from, okay? Because we have a bunch of people losing money over here, and from a psychological standpoint, guys, when a market participant has a losing position, when that position breaks even, the average market participant tends to close that position because no one likes having an unrealized loss. So $50 could be a spot from which the KRE could be potentially failing at. And from a support standpoint, guys, watch out for $44 because at $44, we have the average price of the market participants that started position on the KRE pretty much the same day that this big drop occurred last year when we had a bunch of regional banks going under. So this could be a potential spot for support in the case of the KRE, and I wouldn't touch it from a long standpoint below the 20-day moving average, so below $49. And I don't see it actually bursting above $50, guys. I don't see let's say, an important process of recovery for the KRE until the Fed cuts rates. I don't see this happening, guys. And I think that we might be eventually seeing other regional banks going under. So I don't know. This wouldn't be a ticker that I would be interested in from a long standpoint. Okay, guys. DraftKings, sure. Christine is asking for DraftKings. Okay. Excuse me. Let's go over. By the way, I noticed that DraftKings has been getting killed, guys. And they recently posted a very decent earnings report, but it's been getting killed, guys. It actually was able to pull off a green day today. It went up 0.22%, and it closed the trading session at $40.84. So the bulls of DraftKings, guys, are over here in a very tough spot, guys. Why? Well, because we have the 5-day moving average downward sloping. The bulls weren't able to recapture the 20-day at $41.55. And if the bulls aren't able, guys, to recapture these two moving averages, watch out for the 100-day moving average to potentially being able to start to act like a magnet. So the bulls, they'd better recapture this 20-day moving average as soon as possible. I am talking about $41.66. Because if that's not the case, guys, I wouldn't be surprised if we see a further drop of DraftKings down to $35. So in the case of DraftKings, my trade would be consolidating above both moving averages, the 5 and the 20-day. So let's say that I see DraftKings consolidating above $42.40. That would be a signal, a positive signal, that signals, no pun intended, that buyers are recapturing control of DraftKings in minor timeframes, which is not the case as of now because the buyers weren't able to hold the support both the 5 and the 20-day. So I would be going long DraftKings above $42.60, $43, from $43, let's say, up to the next important gap, up to $45.40. This would be a 7% profit trade. And for those who might be interested in grabbing some puts over here, if the bulls of DraftKings cannot recapture the 20-day at $41.66, we could see, as I just told you guys, a further drop. So this could be a potential short opportunity if the bulls cannot take out $41.66 in the case of DraftKings. Let me take a look at the market structure of the KNG. And mind you, I traded DraftKings the last earnings report. It was a very decent report. But well, they announced that they are buying another company for something like $700 million. The markets are kind of digesting that news, and so far they haven't liked the news. Take a look at the market structure of DraftKings, guys. The demand is falling, and the supply is trying to rise. So buyers are walking away from DraftKings. We can reconcile this market structure relative to the technical chart of DraftKings, because DraftKings lost as support the 5 and the 20-day moving average. So watch out for DraftKings, because if it doesn't recapture these two moving averages, this could be a short opportunity in my opinion. If I take a look at AV webs, let me see what AV webs I can visualize in the in the case of DraftKings, DKNG. Let me see DraftKings. So let me delete this AV web that comes from the second to last earnings report of DraftKings, and let me draw a new one from its last earnings report over here. Yeah, take a look, guys. So the buyers that started positions on DraftKings last week, once its last earnings report came out, are trapped as of now at $43. $43. There you go. $43 happens to pretty much coincide with the 5-day moving average. So this stock is a no touch below $43 approximately. Okay, so let's move on to another stock, and we are 46 minutes in. There you go. So we have Applied Materials, AMAT. Sure. Semiconductor, another semiconductor stock. Applied Materials went up today 5%, and it closed the trading session at $199.73. It is a good looking short. This stock is uptrending above all the moving averages. The 5-day moving average is upward sloping. I don't see any reason for AMAT to not keep going higher, guys. So the most recent, is this a 52-week high or an all-time high? Let me see. Wow, this is an all-time high, guys, in the case of AMAT. My trade here, guys, would be Applied Materials paying a visit down to the upward sloping 5-day moving average. $193, guys. I would be a buyer of this pullback in the case of AMAT. And from $193 up to the level of resistance at which AMAT failed at today, near $201. This could be a 4% profit trade. However, guys, since AMAT failed today at $200, which happens to be also a fat number, what happens if the bulls can consolidate above $200? So if that were the case, we would be seeing a process of consolidation above a former resistance. So a former resistance would be acting as support above $200. If that is the case, guys, we could see Applied Materials filling this next gap up to its all-time high at $270 from $201, $202 once we have confirmed that this previous resistance is now acting as support. And if we started a position near $201, say, up to $270, this could represent a 6% profit trade for Applied Materials. Very good looking short. So give me a process of consolidation above $200, or maybe a slight pullback down to the 5-day moving average at $193, and I would be a buyer of Applied Materials. Let me see the market structure of AMAT. What do we have over here? Let me see. Applied Materials. It looks like I don't have the market structure available, guys. No, I should have it. Yeah, there you go. I have it available. Excuse me, guys. AMAT. Take a look. This is a very good looking market structure, guys. So take a look. The demand is stable, not going higher, not going lower, which is a good case. And the supply is decreasing and below average. Good. And I am not going to take a look at any AV webs, because this stock is pretty much trading at all-time highs. So we don't have any buyers trapped over here in the case of AMAT. Okay. So what else do we have over here? because we are now, there you go, 49 minutes in. I have XOM. A ver, oil and oil related stock. Let me see. ExxonMobil. Wow, the buyers have made some progress over here, guys. Yeah. So Exxon went down today pretty much close flat. 0.09%, and it closed the trading session at $104.76. So take a look, guys. The bulls were able to recapture all the moving averages, all of them. And the 5-day moving average is trying to rise. And what is the 200-day moving average sitting at? Let me see, guys. The 200, what is it at? Damn it. What is it at? Wow, I mean, I need my glasses, guys. I cannot visualize the 200. Okay, here you are. Okay, it is here. So, no, the bulls haven't been able to recapture all the moving averages. There is one more moving average left to recapture, which is a very important one, guys. D200 DMA, which is signaling as of now $106. This is a major area of resistance. And why? Well, because at $106, guys, we have the convergence of the downward sloping 200-day moving average. The fact that this moving average is downward sloping implies that this is going to be a very tough spot of resistance for ExxonMobil, and a previous resistance. This is a convergence from, between a major moving average that is downward sloping with a previous resistance back from October 20th. And take a look at what happened when ExxonMobil hit $106 back on November 20th. The stock collapsed. So the price action is telling us that this spot is very important, because once ExxonMobil hit $106, we saw a major drop in the case of this stock. So $106 could be either a spot in order to short Exxon, if we happen to confirm that this stock isn't able to burst above that level. But if the bulls can consolidate, if the bulls, I have a terrible allergy today. If the bulls can consolidate above $106, what about a further push to the upside, up to a previous resistance at $109? $109 happens to be a previous resistance back from early November. So if we were able to take this trade, guys, with Exxon consolidating above $106, from $106 up to $110, this could represent a 3% profit trade. So there you go, ExxonMobil. Let me see if the market structure says something constructive about the stock of this oil company. Let me see, XOM. Let's see. Alrighty, let's see. Take a look, guys. So the supply is rising and the demand is a bit below the level of the supply. I would say that the very first test of $106, so the very first test, or the upcoming test of $106 could be a failure, guys. Yeah, Exxon could be failing at $106. This could be an unsuccessful test from which Exxon could be dropping, so we could be maybe grabbing puts over here. And on the flip side, if I happens to be mistaken, and if Exxon can consolidate above $106, then we have more likely than not higher prices coming up for Exxon. Is there any AVWAP that is worth pointing out over here in the case of Exxon? Let me see, XOM. Let me see, ExxonMobil Corporation. I don't have any AVWAPs already drawn over here. No, I don't have any. So let's use, guys, this high back from September 27th of last year. This gotta be some sort of 52-week high for Exxon. Take a look, guys. 100, we get a price of $104. So $104. Yeah, it is sitting at $104. This is an important support, guys. So maybe this could be another trade, guys. Since we have an AV web that comes from the from the 52-week high of the most recent 52-week high of Exxon, and we know that the average market participants that started a position, this was back on, as I just told you, September of last year. So they have an average price of $104. This is an important spot from a support standpoint. So what about a process of consolidation of Exxon at $104, from $104 up to $106? This could represent an almost 2% profit trade in the case of Exxon Mobil. There you go. Apple, Google. Okay, let's do two more stocks, guys, before I wrap it up, because I'm super tired over here. Apple went up today 1.12% and it closed the trading session at $184.37. Wow, we have a major resistance coming up for Apple over here, guys. Take a look at this blue line. This is none other than the 100-day moving average. So, and a bit above the 100 DMA, we have the 20-day moving average. In my opinion, guys, I wouldn't touch Apple from a long perspective below the 20-day. So I would like to see Apple consolidating above $187. That would be very positive from a bullish standpoint, because this movement would be signaling that Apple is starting to consolidate above all the moving averages. So that's bullish behavior, no doubt about it. So let's say that we start trading Apple at $187, from $187 up to $190. This could represent a 2% profit trade. This could be my trade on Apple, guys. I am not touching Apple below the 20-day, and I would start a trade over here, a long trade over here with Apple trading above all the moving averages. Okay, I think this is a stock, guys, that is losing momentum as of now. The short isn't looking good at all. Below the 100-day moving average, about to drop below the 200. We have a downward sloping 5-day moving average. This is not a constructive short, guys. So a no touch below $187 in my opinion. Let me take a look at the market structure of Apple. Good old Apple. Let's see if we can notice over here let me see. Apple, come on, pull up. Let me pull up this information and take a look, guys. The demand is starting to drop. The supply is also starting to drop, but above the level of the demand. Not a good looking market structure for Apple. And if we take a look at some AV webs over here, AAPL, let me see, AAPL, there you go. So take a look, guys. Let me delete this AV web, and I'm going to draw a new one from the last earnings report of Apple over here. There you go. Yeah, take a look, guys. So from its all-time high, we have buyers trapped at $187. How about that, guys? You see, this is a massive level of overhead supply for Apple, guys. $187, $188. So we have the 20-day moving average over there, and we have the buyers that come from the all-time high the buyers that come from the all-time high of Apple, also trapped at around $187, $188. Massive. This is a massive area of overhead supply for Apple. And when it comes to this other AV web that I just drew, guys, from the last earnings report of Apple, take a look. $185. So this could have been the reason why Apple failed today today at $185. Okay, we had buyers trapped from its last earnings report, and once Apple hit $185 today, what those buyers did, they simply broke even, and they closed their positions on Apple. So a no touch below 187, 188, in my humble opinion. Thank you for all you do. Thanks, guys. Yeah, sure. Believe me, I am making a huge effort over here when I do live stream for you guys on Thursdays, because when I am live streaming for you, I have been streaming already for something like 7 hours, so I gotta make an effort. Google, my Google, guys. Let me tell you something about Google, and I am going to wrap it up with this stock. This stock is on the very top of my watch list. And why? Well, because I got an unusual options alert in the case of Alphabet yesterday. Let me see if I have it handy. I can tell you guys this. Options alert. Let me see. Where is it at? So, put this down on a sticky note. So, yesterday, check this out, guys. Someone, maybe an institution, invested $4 million in call options of Google that expire on March 15th with a strike price of $140. Again, so $4 million on Google calls that expire on March 15th with a strike price of $140. So take a look at this spot, guys. This is going to be an easy one, because I was actually taking a look at Google today throughout the whole trading session. Take a look at the spot at which Google fell today, right at the 20-day moving average, this pink moving average that you guys can see over here. In my opinion, and again, in regular market conditions, you guys know, the S&P went up today 2%. The S&P 500 went up today something like 150 points in just a matter of one trading session and a half. So maybe we could see tomorrow some sort of profit taking and stuff like that. But again, in regular market conditions, any process of consolidation of Alphabet above $147 is a buy, in my opinion. If we see Alphabet consolidating above $147, we have unfinished business. Where? Over here, right at this former resistance back from February 9th. If we were able to take this trade the way that I am describing it over here, guys, from $147-ish up to $151, this could represent a 2% profit trade, nothing to sneeze at. So this is a good looking chart. As of now, the bulls have been making progress. We have the 5-day moving average downward sloping, which is some sort of warning signal, we can say. But on the flip side, the 200 and the 100 DMA are upward sloping. So we just need to have a bit more of confirmation that buyers are once again recapturing control of Alphabet in minor timeframes. What do we need to see? A process of consolidation above $147, above the 20-day moving average. If we take a look at the market structure of good old Alphabet, what do we find over here? Google. Let's see, before I wrap it up. Take a look. The market structure is showing, as of now, an imbalance that favors sellers. Why? Because take a look, the demand is decreasing and the supply is starting to rise slowly but surely. So a no touch from a long perspective, from a long standpoint, below the 20-day, so below $147. And if the bulls can recapture $147, fuck the market structure. Let's go all in Google call options. And last but not least, let me see some AV webs over here. Alphabet. Yeah, it is pretty much trading at all-time highs. Let me take a look at the buyers from the all-time high, $146, pretty much. Take a look. So give me a process of consolidation of Google above $147, and I am a buyer of good old Alphabet. Okay, guys, I'm exhausted. I am going to grab a beer, most likely. So thank you very much. Thank you for watching. Thank you for listening. And I will see you guys on Discord. Let's see if we can have some sort of pullback overnight. That would be positive, guys. Today we couldn't do anything from a trading perspective when it comes to the SPY. If we happen to see some sort of slight pullback, we might be taking trades with the SPY tomorrow, more likely than not. Thank you, guys. Take care. Enjoy the rest of your day, okay? God bless you all. Take care. Bye. Thank you.